Hi, this week we're going to look at the concepts of support and resistance in the market, how it potentially helps you to identify entry and exit points, how it might indicate a market reversal, all the sort of stuff. My name is Fong, and let's get into it. First off, what is support? So typically in a downtrend, the supply is higher than the demand, and when the price keeps falling, many traders who sit on the sideline will be tempted to jump in, and that's where the demand slowly increased to match the supply, and when it reached a balance, it will pause, and that's it called support. It acts as a floor to prevent the price from falling further, and a strong support level indicates high demand. As you can see in the chart below, where the horizontal lines touch the price 4 times, as indicated by the blue arrow, this is where the demand comes in to stop the selling pressure. This is support. Resistance is the flip side of the coins. It is a price level where an uptrend is paused because of the selling pressure, and it acts as a selling to prevent the price from rising further. A strong resistance also confirms significant selling pressure. As seen in the chart below, the $39 resistance lines are touched 3 times by the price, and it shows that the price has tried multiple times but cannot break through the $39 price. Those examples above are one of the most common form of support and resistance, but the price of financial assets in the long term, they usually go upward or downward. That's why the concept of trending and trend lines is really important when learning about support and resistance. So trend lines are easily recognizable lines the trader draws, just like support and resistance. The difference is they are not horizontal lines, but it's either up, downward, or upward. So this is an example of a downward trend line. So in a downward, we draw the trend line above the price, but in the upward, we will draw it below the price. I don't have the example here, but it's quite easy to understand, so I don't include it. But this confirms the downtrend of a particular stock. There's also a very interesting characteristic of support and resistance, which is round numbers. So round number like 50 or 100 are usually resistant or support line. Why? Because many inexperienced traders they just want to place their stop loss or their limit order based on those round number, and that's also what many retail investor and investment banks are doing. And this can be seen in the Bitcoin price. There are a lot of limit orders at the $100,000 price mark, which acts as a huge resistance line for Bitcoin. So what are the importance of support and resistance? Firstly, it helps to identify potential entry and exit points. So when the price approach support or resistance, it will do uh, either one of these. First one is it will bounce off from those lines, those levels, and it confirms the strength of the support and resistance line, or it will validate, or no, or it will violate those lines and breaks either below or above. So it confirms the strong momentum. It can also be used to set stop loss and take profit orders. For example, you probably want to put a stop loss order under the support, under a strong support level, because imagine if the price breaks below those support level, it will fall very quickly because the momentum has shifted. It also provides insight into market sentiment trends. Take Bitcoin for example again. If the price breaks through multiple resistance level, it shows a huge bullish momentum, and the market is confident in those price levels. Also some limitation. Those support and resistance are not always precise levels. They can be zones, like in this example below. It can be a zone from, let's say, 100 to $102. It can be broken by strong market momentum. For example, a positive earning report can have the price of, let's say, Nvidia breaks through a major resistance line because many people are more confident in the stock. It also requires confirmation with other indicators. You shouldn't just base your trades on support and resistance alone. You should probably pair it with some other momentum indicators like MACD or RSI. So support and resistance are foundational concepts in technical analysis. It helps you to make a more informed decision. But remember, it's not always correct. It's just a probability things. But also combine them with other tools to enhance your strategy, to enhance the probability. Thank you for listening.